Hello, everybody, and welcome to another episode of Talk Chain. This is the podcast where we get into Bitcoin and the cryptocurrency markets. My name is Matt, and sadly, I'm alone today because my good friend Rob decided to forget his headphones. So we had a good podcast lined up, but because he's a loser, he didn't have his headphones, so it sounded like garbage. So I wanted to get on here and at least talk a little bit about what was going on in crypto. So I have the Bitcoin chart here, and funny enough, I go to bed talking about how I'm hoping that it's going to hit all-time highs again, and I wake up to a gigantic bloodbath. So at its lowest point, Bitcoin goes down to like 13,900, and starts to find some support around 14,000, and right now, it's caught up to about 15,300, but wow, big little dip there. And pretty much everything, the entire crypto market was affected by this. And it's over like nothing. So CoinMarketCap decides to remove three exchanges from its aggregate price. So in case people don't understand, the price that you see on CoinMarketCap, it's never what you're looking at on one single exchange, because it's an aggregate of all the exchanges. Or whatever exchanges that CoinMarketCap thinks that's important. So, it removed three exchanges that were not really consistent with the actual price of the asset. And because that was driving the price higher on CoinMarketCap, all of these coins just start dropping. So Bitcoin goes down, and then you start to see all of the selling because people actually think that there's selling going on. So I think it's pretty interesting because it's indicative of how quickly people are to sell. So a lot of people aren't buying because they believe in sort of fundamentals of it. They're buying because the price is going up. So, and it's not to say there's something wrong with that. It just, it tells you that there's volatility, and that can be good because there's a lot of money making opportunities, but it's also kind of bad because big news could really drop this market, and the thing that we heard yesterday was relatively small news. So the fundamentals, as far as I'm concerned, are not too different. The one thing that did come out that was interesting was this leaked document from the Chinese authorities, and I guess I'll get into that for a bit. So I have this article up here from TechCrunch. Apparently, China is reportedly moving to clamp down on miners, and I was looking into it a little bit today, and yeah, so China apparently has about 2/3 of all Bitcoin miners there. So it's a substantial portion of the mining community is actually in China, and of course, one of the big providers, Bitmain, is a Chinese company. So if they were to crack down on mining, that would be a significant roadblock for Bitcoin, and Bitcoin already has problems with slow transaction fees as well as high fees, and losing any mining would actually make that worse. So, we'll see if they actually follow through with this, but it's definitely something to be mindful of. Of course, long term, it doesn't really interfere with Bitcoin because, any gaps in mining will be filled by the market, presumably. So this just creates opportunities for other people to get in there, and the difficulty would adjust if there was a big change in mining. It would take some time. So before that difficulty adjustment, there would definitely be some drama around, how brutal the wait times and transaction fees were. So it's something to keep an eye on. This could also have an impact, I think, on driving money towards coins that aren't mineable. So actually, I guess every one of these with a star is not mineable. So it's really an argument here, if mining is centralized, and government decides to crack down, it really does show that there is a use for a non-mineable coin. So coins where you don't rely on mining are kind of attractive in that way, but there's still a requirement for this Bitcoin as a means to get altcoins in general. So right now we're still very much dependent on mining. So anyway, I thought that was an interesting piece of news. The other thing that I wanted to talk about, so I think fundamentally from what I was saying yesterday, give me a second here. So I still do believe that Bitcoin will test its all-time highs again. Of course, I don't really know when, and anybody who says they do are straight up lying. But actually, I do want to bring up, so something else that came out today that I thought was really interesting and that could actually drive a lot of retail money into Bitcoin are these applications for ETFs. So Dirixion, this company applied for about 5 different ETFs to be listed about Bitcoin. So an ETF is an exchange traded fund. It's sort of like a mutual fund, but it's very minimal management, so the fees are usually really low. And this company here has actually sort of pioneered the different bull and bear ETFs. So they have these for the S&P 500 already, where you have an amount of leverage, and either it's a bull or a bear ETF. And that just means that if it's a bull ETF, it means that it follows the stock. So if it goes up, if the S&P 500 goes up, then the bull ETF goes up. And if it's a bear ETF, it goes up if the underlying stock goes down. So they're applying for this, for both of these, for Bitcoin as well as some leverage. So this just means that it's doubling the amount of movement in the daily Bitcoin movement. So this would definitely bring a lot of retail money that's sitting on the sides right now into Bitcoin and could absolutely drive the price a lot higher. So I could see that as being a real catalyst for bringing Bitcoin to exceed its all-time highs, or at least test them. And of course that would have an effect on the altcoin market. A lot of coins in this little dip were down as well, and very few were up. So I noticed that Icon did okay, and I guess Neo right now is recovering, but a lot of coins were down during this coin market cap disaster that happened. So that's really all I wanted to touch on today. I'm hoping that Rob can get some headphones so we can try and do a podcast together, but I wanted to just talk about how Bitcoin affects Bitcoin being affected by websites that aren't even really affecting the price. It's not an exchange, it's just sort of an aggregate price website. How it could actually have a big effect on the price. So something to be mindful of. I would suggest that invest in projects that you believe in, so that you're not shaken when something like this happens. I bought Bitcoin on this dip, and I think this is one thing about volatility. It's good that it gives good buying opportunities. So that's definitely a plus. But if this sort of thing worries you, definitely just invest in projects that you believe in. I talked a little bit about Tron last time. It's still at number 10, so still going strong, but I don't know how long that's going to last. Anyway, want to thank everybody for listening, and see you next time.